Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so another great big volatility day, another great big room day. We're reaching the point of handle exhaustion in here, if there's such a thing. Monday was 125. Yesterday was 116. It's been going well. At the end of the day yesterday, I mentioned to subscribers, typically what happens here when we go down, we talked in the 60s and 70s that the next logical area for a move was to go down and deal with the gray line here, which is the third standard deviation band. It went down and did that, and it took it out by a decent amount. It hit our bet the house area, 31.51, and it smoked that by like 30 handles. The low yesterday was 31.17 and change. The more important takeaway from hitting the gray line yesterday was how it was going to play out in Globex. What typically happens after this is it does what I call a channel day. A channel day is where the second standard deviation lower band acts as resistance. And so typically what will happen is they'll walk price up, they'll bump their head on the lower band, the second standard deviation lower band, then they'll go down and grab that third standard deviation lower band. And that's what's happened there. So you can see Globex, here's the hourly chart. They tested lower band there for a while, dumped down, touched the hourly lower band. It was also the third standard deviation band on the daily chart, and they're kind of walking it back up. So for me today, it's how long can the bears keep things below that daily lower band. It always happens for one session. I mean, I hate that word always, but it's pretty unusual when it doesn't. Usually it's a news bounce or some really violent rejection when that doesn't work. Typically maybe two. Rarely do you see it hang out down there for three, at least not the mini. Sometimes gold will do that stuff, but so can they hold this as resistance for the entire day? I don't know. I mean, that sounds like we're asking the bears to do a lot. It's going to depend on the news flow. The reality is we got plenty of vol. At some point this week, both sides are going to take a breath. I think that the difficult thing for traders when that time comes is identifying it. But once it gets identified, you have to understand you cannot run around doing high volatility rules in a low volatility tape because you'll just get chewed up. You'll get chewed up. So, it's great that we can take our first thirds for 10, 15 handles but when they settle into an area where they're going to kind of want to rest and take breath, then we're going to have to adjust ourselves back to a little bit more area of normalcy. Now, the news flow can change that. It can destabilize it. But, the key, as far as key prices, you got the lower band here. You've got the Globex low. Our proprietary moving average and volume weighted average price are both landing at right around 32.33. You've got the hourly mid band up there, 41, which is where we are now. That up to 55. Actually, lower band now is 58. So that's the thing with Bollinger Bands. They're a constantly moving target, especially in high volatility tapes like the one we have here. So you got to keep an eye. You got to keep an eye on the yellow line today. It's going to be important. And it's going to constantly, it's going to fluctuate, 1 to 3 handles as you go. That will be the key. If you lose that area, then testing the 100-day up here at 88, 89 is not out of the question. If it continues to hold, then, that 200 is going to, it's not out of line to go deal with the 200-day. And I was saying to somebody yesterday on a conference call, going down and testing the 200-day after the kind of multi-year, it's been, I mean, not quite. Well, it's been over a year. So here's the 200. That's back on. That's October of I guess October of 19. So what are we talking about here? We're talking about 4 or 5 months. Going back and retesting it after 4 or 5 months and holding it. Look, this right here. See where my cursor is? This was not a bearish event. That's a bullish event. You come down to a long-term moving average, you hold it, and off you go. This has been a very violent drop, and it's been a very violent drop based upon just a really slow bleed up to some really high levels, and it's come off, and the news has helped. But if this is all they have, in 2, 3, 4 months, we could be looking back saying, well, they tested the 200-day, it held, and off you go. Doesn't mean you're going to make a higher high. Maybe this wants to be a sell rallies market for a while. It's possible. Your daily mid-band is way up here at 3309. If we start to live below the purple line, well, that's different, and we haven't done that since late 2018, and that's obviously much more of a bearish outcome. That's where if you're living below the 200-day every day, then you're likely in a bear market. You get the 20% correction and all the stuff that goes with it. So, but we're not there yet. We've had a 3-day take the elevator shoot down in price. Now that we're down here, now we make the bigger decisions about what this market really wants to be through the spring and into the summer. All right. Have a great day. More stuff out on social. If you trade this stuff every day and you're out there, you have no business being out there. None. You need to be in here. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.